Fantastic. Method and mindset, Hugh Kimura. So, yeah, I mean, maybe you could tell us just a little bit background, your own story, how you got into trading, and a little bit about Trading Heroes. Just because you've never been on an event with me before, and there's people here that might be interested. So I'll hand over to you, Hugh. There we are. About me, to take the words out of my mouth. I'll hand over. Thank you.
Okay, thanks. Thanks, Simon. Yeah, a little bit about me. I've been trading Forex and stocks since 2007. I got into trading by reading some options books, I think it was, and then reading the Market Wizards, I think like a lot of people did, and that really sparked my interest. I bought a ton of books and started learning about it. I found Trading Heroes around 2007 also, and I'm also the founder of Razor Journal. I'm a trading coach and I develop trading products. I'm also the co-founder of the Think Profit podcast. I am a mindset optimization researcher, and I worked at the trading desk of a hedge fund. And I wasn't a trader at that point, but it was a really interesting experience because I got to see these traders at work, you know, hundreds of millions of dollars coming across my desk every day, and really seeing the psychology of how these guys work. So that was a really interesting experience that helped me in my trading. So this presentation is going to be based on my own personal experience. And like many speakers have said before, you need to really figure out what works for you and do that. But I just want to give you a jumping off point. And I believe that some of these topics that I'm going to talk about are not really talked about too much in the general trading education world. So I think you'll find this interesting. And I hope it gives you some ideas on where to go next. And be sure to stick around to the end. I'll give you a couple of free downloads that are related to what I'm going to be speaking about. So I want to start off by saying that my mission is to help you find your inner hero. And I represent that with this icon. And that's one of the reasons why my site is called Trading Heroes, because I want to bring this hero out of everyone. And this hero is the person that you know you can be. This is the person that is living the life that you want to live. And this is the person who is exercising their full potential, and that's what I want to help people do. So in trading, obviously there's method and there's mindset. You need the method or the trading strategy, but more importantly, you need the mindset. You need the proper mindset going in. You need to be able to snap back from a losing streak. You need to be able to persevere, because trading really is a difficult skill to master. And so I want to give you a little bit of each of these things so that you can go away and possibly use some of these ideas. So first of all, let's talk about hedging. I know hedging kind of gets a bad name in the Forex world or in the trading world in general, but I think that once you see some of these concepts in action, you might want to experiment with some of these ideas, because hedging has really worked well for me, and it could work for you also. So if you haven't heard of hedging before, hedging is basically when you hold a short and long position at the same time. The trader is looking for opportunities to take profit on both sides of the market during the course of normal market fluctuations. And before the US traders jump in here, I just want to let you know that that hedging is possible in a US account. So I'll show you how to do that in a minute, but it is possible. It's a super flexible way to trade. It can be used with existing strategies, and there's no stop losses, so you never get stopped out. And at this point, some people are like, what, no stop losses? Because using stop losses is like one of the 10 commandments of trading, right? Along with don't risk more than 2%. But as you'll see in this presentation, if you hedge, then you don't need a stop loss, because essentially the hedge is your stop loss. So that's how you limit risk. So for example, if you had a chart like this, maybe you don't know which way price is going to go. This is a key resistance point, technically speaking, and maybe you think, okay, this could go short, but at the same time, this was a pretty strong move up, and this move could continue. So maybe you want to take a long also. So this is an opportunity to hedge, and you could see how this plays out by having both a short and a long position. So Forex is a perfect market for hedging, because it's equally easy to go long and short. You can custom tailor your position sizes, unlike the futures market, where even if you trade mini contracts. They can still be pretty big, and you still need a pretty big account to hedge in the futures market. But in Forex, you can get away with a smaller account. You have great liquidity. You won't get trapped, limit up, limit down, stuff like that. And many Forex brokers will keep your trades separated and not blend them together. And this helps in keeping track of the profit and loss on each individual trade instead of getting them all mushed together. And finally, like I mentioned, you can trade nanolots in the Forex market, and that allows you to hedge even if you have a small account. So if you have an account as small as like $500, you can get started and kind of learn the basics, learn how to get out of sticky situations, and go from there. So who's a good prospect for hedging? You might like hedging if you don't want to be too concerned with any one position. A lot of people hate that feeling when you wake up in the morning and you check your positions and you got stopped out. So if you don't like that feeling, this could be one way to trade. It's a very flexible way to enter and exit the market. If you don't like the rigidity of having one entry and one exit, or two entries and two exits, then you can enter a little here, exit a little here, enter a little here, and it can be very flexible. If you might want to use hedging to accumulate interest-bearing positions, and I'll get into that in a minute, but that's basically a carry trade, but you kind of scale into it with hedging. If you want to boost the profits of an already profitable strategy, hedging can allow you to add in a little bit of key elements that will allow you to make a little bit more money. You can take extremely small risks. So if you're a very risk-adverse person, hedging could be for you. And if you prefer consistent wins over large winners, then hedging could be for you also. And if you like to set up traps on the chart where you can set pending orders and then take profits, then hedging can be a good way to do that also. Now, of course, there are no free lunches, so there are downsides to hedging, of course. You might have to sit in your position for a while, sometimes a couple weeks, sometimes several months, before you can find another good opportunity. And this can really weigh on some people. They want to trade, right? But in order to be profitable in hedging, sometimes you have to be patient and you have to sit on a position. It takes discipline not to take new trades or increase your position size. That's another common temptation where you trade bigger than your original size because you want to blank out your losses, but that just digs your hole deeper sometimes. So that's something that you shouldn't do. Sometimes tracking many open trades can get confusing, and there's a lot of negative press about hedging. You'll hear a lot of traders and educators say that, oh, hedging doesn't work, blah, blah, blah. And so you need to maintain your confidence. You need to prove to yourself first that this works for you, and then you can go on and ignore those guys if it's something that you choose to do. And what people consider a downside is that you won't have a huge winning month usually. Typically, I'll have a winning month of between 0.5 and 2%, but the wins are consistent for me at least. And it can be for you, but you won't have those 20, 30, 40% winners, 20, 30, 40% months. So that can be a downside for somebody if you prefer to have the big winners. Hedging myths. There are some courses out there that give hedging a bad name. For example, like I think there's something called the no loss hedging system. And that's a myth, of course, because you can't have 100% winners. And eventually you're going to have to take a loss somewhere. Some people say hedging is impossible because the losses cancel out the gains. But if you're a little bit imaginative, you can figure out ways to still hedge the risk without having the losses totally cancel out the gains and being net zero. And like I mentioned before, US traders can hedge, so not being able to hedge in the US is a myth. And another myth is that you need a big account to trade or to hedge. Okay, so hedging in the US is pretty simple. Just open 2 sub accounts. You put your buys in one account, sales in the other account, and you're good. Okay, so getting started with hedging. So when you're looking to place a hedging trade, there are basically 3 questions that you ask yourself. Where will you enter on the chart? How much will you hedge? Will it be 100%, 50%, or 25% hedge? And those are just numbers that I like to use, but you can use whatever percentages work for you. And will you do a hard or a soft hedge? So let's talk about these concepts. So a 100% hedge, the way I use it, is best done in the middle of a range because You don't know if price is going to go up, you don't know if it's going to go down, but it's probably going to bounce around in that range. So you can have an equal long and an equal short in the middle of the range. And then typically you can work yourself out of the two positions at a profit because price will go up and down. So looking at a 50% hedge, this is when you have a bias in the market. So for example, this is a heavy resistance point, and if you think that price is going to drop, but you're not totally sure about that, then you could put on a 50% hedge where you short 4 mini lots and you go long 2 mini lots. So if price bumps up a little bit out of this range, then you can take some profits on the 2 mini lots. But if it goes in your direction, then you're still net profitable, but because you have a position size that's twice as big to the short side. And then 25% hedge, I believe, is best used in a trending situation. So for example, let's say that you think that this is the beginning of a trend. So you might want to go long 1 mini lot and short 4 mini lots. And that can help you take advantage of the trend. But if the price does go against you a little bit, then you can use that 1 mini lot or the 1/4 position to take some profits also. Okay, so hard hedge versus soft hedge. A hard hedge is when you put in both of your orders at the same time. So you do a long and a short at the same time. And this would work, for example, in that 100% hedge that I showed you earlier, where you're in the middle of a range. So that's when you might want to enter both positions at the same time. A soft hedge is when you enter one position first, and then you set a pending order on the second position to hedge it. So for example, you're in this same range, and let's say that you want to play the bounce off the top of the range. So you enter a short position at the top of the range, this lower blue line, and then you just wait for price to do its thing without entering the long position. But you put a long position pending order above the price action. So if price does pop out of this range, you're also covered. And in this case, if price went down, you wouldn't execute the pending order above, and then you would make 100% profit. But if price does something that you didn't expect and it pops out of the range, then at least you're covered. Okay, so we can go through an example hedging trade here. Like I showed you in that other slide, you could go long 1 mini lot, short 4 mini lots, expecting a trend. Now, if price moved down to here, then you would be net profitable because you only did a 25% hedge. And that would be an easy way to get out of this position with a net profit. Now, this seems easy in theory, but there are a lot of pitfalls with hedging. So the number one pitfall is accumulating a position that's too big. And I'll show you a little bit of that in a minute, but there have been a lot of traders that have used hedging in the past that I've tracked over the years, and they all have this similar issue. So I'll get into that in a minute, but just remember that you shouldn't accumulate a very large position. And you don't accumulate a large position by rolling off your losses, and I'll show you how to do that. Don't increase your trade size is another way of not accumulating a large position. Excuse me. And then trading too many pairs at the same time can also get you into trouble. You shouldn't trade pairs that have a large spread because many times you just want to scalp in and out with some of these hedging trades. And if you have to sit around with a large spread and wait for price to overcome that spread, then you're going to cut down on your profits. The next pitfall is using too much leverage and then not being properly hedged, obviously. So this is a chart of a typical hedging trader. And I've tracked a few of these traders over the years, like I said, excuse me. And then, so what typically happens is that they start off really good. So in the first year, they have consistent profits. Second year, consistent profits. And that's when they start raising money, right, from investors, increase the account balance. And then they might have another good year, but then you realize that you see that the equity growth or that orange line starts to dip. And that's because they're accumulating these negative positions that are going against them and are dragging down their equity. So you'll start to see that probably about the fourth year in this case, but I think that's pretty typical on the timeline. So when you see that equity start to dip, in this case, this trader was able to recover it. They probably caught a trend or something, and you can see a huge run up in the account size or the performance. And then usually at the end, what they're going to do is, or they're going to have some positions on the books that they cannot get rid of because they've accumulated too big of a position. So they're going to have to dump them. And that's what usually happens at the end of the chart. You can see here, this trader had to dump the positions. And even though he dumped it, he's still in a pretty good position. But still, you don't want to be giving back all these profits, especially if you took on investor money, right? So you need to remain diligent when you're hedging and roll off those losses as soon as possible. So the way that I avoid some of these things is that I roll off a position or part of my profits on the losing side, and I'll show you how to do that in a minute. I try to get to flat as soon as possible. That's my biggest goal when it comes to hedging. I don't want to have a big position. I don't want to be carrying a lot of stuff. I want to get to flat as soon as possible, even if that means giving up some profits. So I keep my position size small in each trade, and I never have too big of a position at any one price level. So that's the kiss of death. If you have a big position at a certain price level, then it's really hard to work yourself out of it. If you have a cumulatively big position at several different price levels, then it's easier to work yourself out of it. But you don't want to keep too much of your position at any one price. So what is the roll off? Basically, you're going to be taking part of your part of your wins and then rolling off part of your loss at the same time so that you reduce your overall position, but at the same time you're making a profit. So if we take that earlier example where we're looking for a trending trade, I showed you how to get out of the position if it went down, but let's say that you think it's going to go down more. So what you can do is just roll off part of the position. So you could take off one mini lot when price starts to retrace a little bit. And then on the losing side, you could take off 0.3 of a mini lot, and that would net out to a net profit, but you would also still have the opportunity to take advantage of the rest of the move. So that can be one way to roll it off. Okay, and hedging can also be used in conjunction with other trading strategies. So for example, let's say that this orange line is a key support level that you think is going to hold. So you got a nice big pin bar there, very wicky price action at that price level. So you would go long at that upper blue line, right, with a typical trading strategy. However, you could possibly slip a hedge in there where you say, okay, if price drops and it does something unexpected, I'm going to enter a short, and then I'm going to exit both positions at the original stop loss. So you'll make a little bit on that short, you'll lose money on the long, but you won't lose as much as you would have if you didn't put in that little short position. So that's one way that you can use this with typical trading strategies. Okay, so I have a few specific strategies that I like to use in hedging, and I'll give you a couple of them. One is the bank trade. I call it the bank trade because you're basically banking these trades and you're earning interest. It's a carry trade, right? And in the current interest rate environment, this isn't possible, but if interest rates, the differences become big again, then this is something that you could use. So for example, let's say that on this chart, you're earning interest on the long positions, and the orange line at the bottom is a all-time low for this pair. So what you could do is you could just start to scale in down near the orange line. If it's above the orange line, you buy. And then if it's below the orange line, then you start shorting some positions and taking profits quickly while you hang on to those long positions. Pretty simple. Another one is the buffer trade. So let's say that you want to enter a position at this orange line and you think that this is a key resistance point and the downtrend will continue. But you might not be totally exact on the price, right? We never are. So you want to have a little buffer in order to take advantage of this move, but still not get stopped out completely. So what you could do is you could set up some pending orders above your initial entry point, pending orders to short, and you can also put some longs in there also. And maybe price pops up and it hits 2 of your pending orders to go short. And then it hits the 3rd one, and then it drops. So now you have 2 additional positions in there to take advantage of the move. But if it went up, then you could hedge yourself at each of these positions with a long, and then take a little bit of profit as price moved up. So that's a good way to provide yourself a little bit of a buffer on a trade even if you don't know exactly where it's going to turn. All right, so before you start in hedging, always test this out in a demo account first. Hedging is super easy when you're starting out, or it appears easy because you're just making profits. And then you start to accumulate these positions that aren't working out. And then at some point you're like, oh crap, I'm down 1,000 pips, right? So make sure you try this on a demo account because you need to understand how to get out of these sticky situations and how to work off your losses. And like I mentioned before, getting to flat should be your #1 goal at all times. Otherwise, you're going to have to give back those losses at some point, like I showed you in that graph. You can use backtesting software to speed up your learning process. That's a great way to run through the process and test out some ideas that you want to trade with. And think of your own uses for hedging. I'm only giving you a few examples, but you can get really creative because there are a lot of different ways to use hedging in your trading. Be disciplined, don't overtrade, and most of all, have fun. I think hedging, one of the biggest benefits of hedging is that you can have a really flexible trading methodology and not get too tied up in the stop losses and where to take your where to place your take profits. So that's hedging. And if you have any questions, let me know. I'll let you know how to get in contact with me at the end of this. But moving on, let's get to mindset. So this might be a kind of an odd, you might think it's an odd topic to talk about. And if I was listening to this maybe 5-6 years ago, yeah, I would have agreed with you. But one of the biggest issues that I found in when trying to upgrade your mindset for trading is this idea of hidden traumas. And in trading, obviously, we're looking to do some things that go against human nature, right? That's why trading is difficult. We're trying, we should be aggressive when we're timid, and when we should be try to play it safe, we should be aggressive, right? So it's really counterintuitive to how we're wired. And so in order to be successful in trading, we need to make some lasting behavioral changes. And this is not an easy thing to do. So if you've been on any trading psychology webinar, you've probably seen this picture. This is our mind, and above the water is the subconscious, and below is the conscious, and below is the subconscious. And the subconscious plays a much bigger role in the way we think, the way we perform, and what we see above the water, or what we can perceive with our conscious mind, is only a very small fraction. And this picture is probably way out of scale because the subconscious should be way bigger, but you get the idea. So when we're trading, or when we want to become a high performance trader, like I mentioned, we want to go down deep into our subconscious and pull out the parts that will help us become successful. So that's essentially going down there and picking up your inner hero. You want to rescue your inner hero from your subconscious. And that's where working with a trading coach or a trading psychologist can come in handy. And the thing that really put me on this path, dealing with trauma and trying to change our mindset through that lens, came through an experience of working with a trading coach. So I was working with a trading psychology coach, and he was convinced that all of our trading issues come from childhood. And I'm not saying that's not true in some cases. For some people, that can be the case. But he was really harping on, okay, the reason you're not a successful trader, or the reason why you can't get to the next level, is because of your childhood. So he would bring up all of these childhood experiences, and he would say, okay, that's the reason why you do this, or that's the reason why you do this, and that event caused you to think this way. And I stuck with him for a little bit, and I gave it an honest go. But at the end of it, I was like, okay, that might be partially true, but it didn't resonate with me. It didn't seem like that was really the cause. So it put me on this journey of trying to figure out, okay, how can I get to the next level? Excuse me, and what are the things that are holding me back? And what are the things, by extension, that are holding back a lot of traders? And the conclusion I basically came to was that it's trauma. And that might seem a little weird right now, but stick with me because I think you'll find this interesting and very helpful. So hidden trauma, I did a lot of research, I did a lot of reading, not only in the area of high performance, but also in the areas of medicine and psychology. And I found that hidden trauma can cause diseases, mental disorders, addictions, behaviors that you cannot explain. If you've ever been in the situation where you do something and you try to change that behavior, but for some reason you just can't do the opposite, right? And that could be also a feeling that you cannot succeed or you don't deserve to succeed. And obviously all of this type of behavior leads to poor trading performance. So before we get too deep into trauma, I think we should make a distinction also that there is a difference between habit and trauma, right? So with habits, it starts from things that you maybe learned in school, through your own upbringing, through your family, or maybe even through your friends, your peer group. So a habit is more of like a surface level thing, and maybe it's something that you just never gave too much thought to. It's something that you always did, and it got ingrained in your brain. And maybe that's something that is not the result of trauma, but just something that you need to be aware of and to just change through behavioral modification. So habits can be changed through simple awareness sometimes, or behavior modification techniques, and I'll get into that in a little bit. But if you can't change a behavior through habit modification, and they're just, you try all the things that you read in the blog posts in terms of trading psychology, and you still can't figure it out, then there could be a trauma involved. And if you're interested in reading about habits, then I highly recommend this book, The Power of Habit by Charles Duhigg. And he really gets into how habits are formed, how habits can affect you. And even people who have some brain damage, but they have a ingrained habit, can do certain things just because the habit is ingrained. So it's really a interesting look at how habits affect us and how habits can be changed. And he gives some specific steps or a method on how to change our habits. So this is a really good book to read about that. However, like I said, if it's not a habit, if it's not strictly a habit that's affecting you, then it could be a trauma. And hidden traumas can be affecting your life and your trading more than you realize. And some of these traumas, at least for me, I wrote off some of these traumas as things that weren't really affecting me or shouldn't have an effect on me, right? But it did have a greater negative effect than I thought. So this is something that should be really looked at, and it goes a lot deeper than I think a lot of psychiatrists or trading psychology folks look at. So I would highly recommend taking a good hard look at this, because it can have an effect on you. And these traumas can get stored in your brain and parts of your body. So if I've seen people that have issues with certain parts of their body, and it's because that a certain trauma is trapped in that part of the body. And it's really hard to change or release these traumas because the ego gets involved. So a lot of times our egos are invested in this trauma. This is our identity, and this is the way we are, and we're not going to change, right? And once the ego's involved, then it's really hard to change, because the ego doesn't want to let these things go, because this is who we are. This is who the ego is. And in order to get rid of these things, releasing the traumas also releases some of these things from the ego and allows us to get down and rescue our inner hero. And at this point, I just want to point out that this is not a victim mentality. I'm not saying you should say, oh, poor me because this and this happened, right? No, completely the opposite. This is a message to empower yourself. Once you understand that, okay, a trauma could be related to why you're not trading well, or a certain behavior that you want to get rid of that's particularly stubborn, then you can take steps to change that, right? To resolve that. But if you don't understand that, then you're always going to be wondering, okay, why am I doing this? Why am I doing this? I know this goes against logic, but I keep on doing it. So I hope that this empowers you, and this is not to make you a victim. This is to make you a stronger person and to make positive changes. Okay, so there are basically three sources of trauma. One is the environment, one is your life, and number three, which you might not have thought about before, is that trauma can actually be inherited. So number one is environmental trauma. So the obvious ones are like toxins. So like, you know, like these smokestacks putting out stuff into the air. I've read a lot of stories about people who have been affected by black mold in their house. So if you have some sort of trauma like that, then obviously you aren't going to be able to perform at your best because you know you're tired all the time or you have brain fog or whatever it is, right? And other environmental traumas could be like power lines. Some people are affected by power lines over their house. And then if you obviously have a poor diet, you're not going to have the amount of energy required to trade, to think, and to perform well. And then another potential trauma is environmental accidents. So maybe you got into a car accident and you know, there's some damage to your knee or something like that, and that could be a trauma also. And then there's life traumas. You know, during the course of everyday life, everyone has some issues. Maybe you had a tough childhood. Maybe you were the victim of abuse. Maybe you had a difficult relationship, loss of a loved one, or a bad job. And I just want to point out here that a lot of times if you go to a psychiatrist or a therapist, they will bring up these life traumas and then talk you through them. But in my experience, what I found is that they typically won't give you a way to really resolve it. Not in all cases, obviously, but many times they think that just the awareness of these traumas can resolve them, but that's not always the case from what I found. So even though you talk about it, you could be talking about it for like 10 years and it could not be resolved in some cases. So just keep that in mind. And then finally, inherited trauma. This one you might not have heard of before, but the science is coming out and showing that this is definitely the case in certain circumstances. So these kind of things were started before you were born. They, you know, might not have started with you. So that's something to consider. They can also come from people in your family line. They can come from people in your cultural background. So if you're from a cultural group or an ethnic group that has had trauma historically, then that can get carried forward also into your psyche. So here are a couple of scientific studies on this idea of trauma, both from major scientific publications. The first one's Science. You can look this up online. The title is Parents' Emotional Trauma May Change Their Children's Biology. Studies in mice show how. And in this study, they show that up to 6 generations of inheritance can happen, or 6 generations can inherit a trauma from the first generation. And this is a really, you know, legit study. They did control group. They took the mice out of, or they took the kids out of the presence of the parents so that the behavior of the parents wouldn't affect the kids. And they show that the trauma can affect the kids up to 6 generations. And it's not really clear what the mechanism is, whether this is a genetic inheritance or it's some sort of energetic inheritance, but the studies have shown that it can be inherited. And the same thing in Nature. Nature is another huge scientific journal, obviously. And the title of this one was Fearful Memories Haunt Mice Descendants. And in this study, they showed that the trauma can last at least 2 generations. So this is another experiment that shows that trauma can be passed down through family lines. And if you want to get a more in-depth look at this, this is the book that I recommend. This really turned on the light for me. It Didn't Start With You by Mark Wolin. And he goes through specific cases in his practice, family trauma practice, where he showed that trauma can get passed down and he gives you ways of resolving it. So this is a really good book to read. And I think that that's one of the things that's missing in traditional psychotherapy or psychology coaching, is a way to actually resolve the trauma and resolve these issues and not just talk about it, right? So in my own personal experience, I found out that family trauma is a real thing, and that's why I'm talking about it, and that's why I think it's so important. For me personally, I found out that I inherited some trauma from my great-grandfather. Now, I never met the guy, and you know, he was, but what I know of him is that he was a samurai in Japan, right? And so he was in a very highly exalted social position. He came to Hawaii, and he had to work on the farm. He had to work in the fields, you know, and he eventually started a bike shop, but he was always frustrated because he wasn't able to achieve that same level of social standing that he had back in Japan. So he became an alcoholic. He passed that down to his son, my grandfather. My grandfather was also an alcoholic. And then luckily my dad was able to break that cycle of alcoholism, but some of that trauma was still passed down to everybody in my family line. So once I was able to work that out, the mindset shifts were amazing. Like certain limitations that I had put on myself were lifted, and there were many benefits that I just couldn't go into here, but it was just a life-changing experience, for lack of a better term. And I think that this is something that really needs to be explored because it can help us as people and as traders. All right, so what didn't work? Like I mentioned, talk therapy. You know, a lot of psychiatrists, psychologists, or whatever will take you to talk therapy, and that has certain benefits, obviously. But I think that you really need to explore beyond talk therapy, and that's something that I help my students with. I point them in the right direction based on what I'm seeing in their performance. And sometimes, you know, it's just changing a habit. Sometimes it's something deeper. So that's some of the things that we work through, and I send them to professionals that I feel can help them. Just reading books didn't really help me either. I mean, you can read something, you can understand it, but what you really want to do is you want to go out and experiment with the stuff for yourself, right? And the only way that you can change is if you actually try. It's just like trading. You can't just read a trading system out of a book and expect to be successful. You have to put it into play. And the same thing with some of these concepts. And then visualization, for me, visualization was difficult. I had a hard time visualizing myself getting to the next level. And it was really, really frustrating. And a lot of people who work with mindset and help people upgrade their mindset are going to tell you, oh, just visualize this, right? Visualize your life after whatever. And I had a hard time doing that. So these therapies really helped me. And now I can visualize things, but whereas before I couldn't. So if you're having that problem too, then don't think that there's something wrong with you. It's just maybe something's blocking that ability to visualize. So what did work for me? I used some subliminal recordings. Those helped at least get rid of some surface issues that I had, and they helped me get into the deeper levels of my psychology. Then brainwave entrainment. I've used like binaural beats. And as you can see in the picture here, I have this device that you put in your head, and it puts you in an alpha state. So it helps you learn faster and focus better. And then I've done some energy healing. And within that realm, the best one I've done is the emotion code. So if you want to look at that book, that's a really good book to look at. And I really like that book because it's simple and it provides you exercises that you can do at home. You don't have to hire a therapist. You don't have to go anywhere. You can just do these exercises at home, and you can release some of these negative emotions that you have. And I've also done some shamanic journeys. Meditation is obviously a big one because that's what keeps you centered throughout the day, throughout the week, and really helps you perform at your best because you're focused and you're relaxed. And then finally, some dream analysis helped. You can analyze your dreams and you can see what is going on in the deeper areas of your psyche. And that really helped me overcome certain things that I was working with. So finally, remember that, you know, it's a habit or a trauma, and that's how you're going to basically change your behavior. And these behaviors can be difficult to change sometimes, but if you stick with it and you really start to pull the strings and figure out what's going on with you, then you can start to change some of these things. And some people will stick with, okay, all the trauma happens in your childhood, or all the trauma happened because of X, right? But you really need to do your own experimentation. You need to find out for yourself, and that's when the big wins come. So finally, I just want to let you know that, or just remind you that you are more powerful than you realize. You read about all these traders in the market wizards, or any of those types of books and you think, oh, maybe one day I'll get that. No, you are capable of doing that. And I want to remind you of that. And I want to help you develop yourself to your fullest potential. And that means clearing some of these mental blocks, upgrading your mindset, and having the right methods that work with your personality. So if you want to find out more about this stuff, I have some free downloads. If you want to learn the hedging methodology, I have some more details on that. You can just Google Zen 8 Forex hedging, and that's what I call my hedging method. And then just look at this blog post, my best Forex hedging strategy for FX trading, and that'll give you a free PDF download and show you more of the ins and outs of the hedging method. And on the psychology side, on the mindset side, you can download the free trading psychology PDF, learn how to choose the best trading strategy for you. And you can just go to tradingheroes.com and there'll be a pop-up that will allow you to put in your email address and you'll get the free PDF that way also. So if you have any questions, Hugh at tradingheroes.com, Trading Heroes on Twitter, and you can also find me on tradingheroes.com and thinkprofit.io. All right, thanks for being here, and I hope you found that useful.
Fantastic, Hugh. That was really useful. It's very something that we haven't heard before. The hedging has been touched on, but I don't think we've ever had someone explain it in such a clear manner, which you did, which was great. So really enjoyed that. Thank you. Leave your contact details there in front of us, if you may. I know people will be copying them down at the moment. We've got some questions. If you're all right for 5 or 10 minutes to.
Yeah, sure, no problem.
For me to wind back a little bit. Well, the first question actually was, do you have a YouTube channel? And
yeah, Trading Heroes on YouTube also.
There we are. Marzena says, I love this method, but I've blown my account using it. I'd love to learn doing it the right way. Okay, so that was at the beginning of the presentation. Maybe Marzena, you feel differently now. Let's hope. Oh, she goes on to say, would you only hedge in Forex, but not indices?
Yeah, just in Forex.
Is that because of the sort of liquidity?
Yeah, and the position sizing, you can use like nanolots in Forex to really, fine tune the exits. So that's the reason why I only hedge in Forex.
Okay. Pete says, couldn't you place 2 trades, one long and one short, on negatively correlated currencies?
Yeah, you could, but I would argue, why not just put the long and short on the same one? I think adding an extra currency pair in there kind of adds a level of complication. So I wouldn't do that, but that's certainly something you can do, especially if you've done the correlation studies and you're pretty sure that there's going to be some sort of reversion to the mean or whatever, right?
Another strategy. Andre says, would be great, but my broker charges for use of leverage. It's an additional drawback.
Charges for leverage, interesting. Okay, yeah, so move brokers.
Move broker. Michael, hedging seems to be an effective method for day trading in a highly volatile market, especially when you can profit on both long and short positions on the same day with wide price movements. However, if there is no price movement for days, you have both positions working against each other and the daily overnight charges to pay on both positions. In such a scenario, is it better to keep cash?
Yeah, I actually tend to think that hedging is probably better on a longer term positions, like swing trading, because yeah, if you're trying to keep track of multiple positions on a day trading platform, then it can get a little confusing, at least for me. So I wouldn't day trade it, but yeah, you also have to take into account the rollover, right, on those positions. So that's something you have to factor in.
Okay, thank you, Michael. Good question. Marguerite says, does hedging take more mental energy as you're concentrating on 2 trades? Well, possibly
Yeah,
true?
that's a good question. It depends on the person, right? For some people, hedging is less stress. For some people, hedging is more stress. And when I first started hedging, I kind of took those each position too personally. So it did eat up a lot of mental capacity. But after a while, you get used to it, and then it's actually less stress for me nowadays.
Cool. What is the study of generational trauma called?
There's
Is it
several studies. You can Google the titles that I gave you on that one slide, but then you can do your own
okay?
research afterwards. You can just say like generation or inherited trauma studies or something. Google something like that, and you'll get a bunch of stuff.
Great. Akira says, "Amazing, Kimura-san. God bless you." Someone maybe
Thanks,
that
Akira.
knows you already from other events. They're fantastic. Edward, applause your presentation. Andre says, "Thank you very much for sharing your thoughts about this most important experience." P Wall says, "I don't get this hedging. Why not just close a position and flip and go away and go the other way? Close the position, flip it, and go the other way." Yeah,
Yeah, I mean that's an option too. I mean that works better for some personalities, right? And if that works better for you, then go that way. But if you hedge, sometimes you have the confidence that you have limited your losses, but you can also take advantage of moves in both ways.
what I like about you, Hugh, is that you're not saying that there is just this is the way to trade, this is the way to do it, and you're very, yeah, trading is a very personal thing, and different personalities fit different styles.
Yeah,
There we are.
totally.
My friend says, "I have lost on the Dow, dear." Marguerite says, "I have just received some brainwave training CDs. Are you listening to them as well?" I'm not sure. Does
Yeah,
that ring
cool.
a bell?
Yeah.
Brainwave.
I've been using what have I used? I've used HoloSync, some BrainSync recordings, and those helped a lot.
Amazing ending of the presentations. Thanks for sharing your personal experience. Grandson of samurai biology
Thanks.
trauma. I think Nadia. Amazing mix. Thank you.
You're welcome.
Same instrument must be easier to balance. Right. Okay. Charging for leverage is swap, says Richard. Longer time is better, but this charge I was told about is for an overnight position. Andre again.
Oh, okay. So
Fantastic.
just a rollover then. Yeah.
Over fees, that's right.
Yeah.
Thank you very much, Hugh, says Ali. Fantastic. Any
Yeah, you're
more
welcome.
questions that we have for Hugh before we lose him? I have to say, I'm very jealous of you living in San Francisco. It's one of my favorite cities. We've spoken to Walter Peters this morning in Sydney, which is one of my favorite towns, and now San Francisco. I visited them both on the same trip a
Oh,
long
nice.
time ago. We stopped over in San Francisco for 5 days and then took the big long flight all the way down to Sydney. But great city.
Cool.
What part of the city are you in?
I'm actually not in San Francisco. I'm in the East Bay, where it's a little less hectic. So it's good out here.
Oh, fantastic. That sounds lovely. Marzena, do you teach this method in a structured way with lots of examples and mentoring?
I do have a course on this, but I don't do mentoring. But if you wanted to do something, I think we could work something out.
Probably best just to go to the website. All the details will be there at the
Yeah.
website.
Yeah.
Fantastic. Well, Hugh, it's been a privilege to have you on the event, and thank you for taking the time out to join us and to support us as well with social media. I know you've done some support for the event, so we really appreciate that, and hopefully we can do this again at some point in the future.
Yeah. Thank
But
you so much for
in
having
the
me. It's been an
meantime,
honor. Great to meet you also.
absolutely our pleasure. So what I'll do is I'll take the presenter role back now, and we can let you get on with the rest of the day.
Okay,
And
cool. Thanks.
we'll keep in touch.
All right, sounds good.
Brilliant. Bye bye for now.